Hey guys, welcome to the Wave Crypto Club. Today we'll talk about one market that is so gigantic that it dwarfs the global GDPs of all countries put together. This market is the derivatives market. It is estimated that the derivatives market is over 1 quadrillion. Right? That is like 10 times the size of the total GDP of all countries put together. And is there actually a market that big? Yes, it is. Such a big market. It exists. What exactly are derivatives? Derivatives are essentially financial instruments that are used for speculation, that are used for hedging, and there are cryptos that are getting into this space. So how does a derivative actually work? I'll give you a very simple example to tell you why or what is the use of something like this. So imagine you're a oil company or you're a company that actually wants oil, and you're concerned that the price of oil might just go up. So you're in November, you can, let's say, buy a futures contract for $62 that expires in December. What this essentially does is, even if the price of oil goes up, then you can still buy the oil at $62. Now, the company that you entered into a contract with is obligated to sell this to you at $62. And hence, if the price goes up, you benefit from it. If the price goes down, you can ignore this, you can buy it from the market, you still benefit. Now, what does the seller actually benefit here? Imagine you're the oil company. The oil company is the seller here. The oil company has to hedge the prices. The prices are fluctuating on a daily basis. Right? The oil company needs predictability, and these contracts help the oil company get that predictability. Derivatives are so important for the financial world. Every big financial market has a blossoming derivative market as well, which is always almost bigger than the financial market itself. Cryptos are also getting those markets, and Synthetix is one of those leading tokens in this space. Right? Synthetix is the derivatives liquidity protocol. It has more than 300 million in total value that is locked. What exactly is Synthetix? You can create a synthetic asset, right? That tracks the price movement. So imagine a very simple example. You're sitting in India. You want to invest in Tesla, or you want to get the benefit of the price movements of Tesla, but you can't because you probably regulations. It's in a different country, a lot of restrictions that you're not able to buy the Tesla stock. So how can you do that? You can actually create a synthetic Tesla on Synthetix, and that will help you track the price movements of Tesla. Right? Isn't that great? So Synthetix actually can help you do that for any commodity. It could be for currencies, it could be for cryptocurrencies, it could be for stocks, it could be for commodities, it could be for anything that has a price. Right? As simple as that. And because of the fact that this is becoming borderless, the global derivative market itself is so big, and the fact that cryptos can make it borderless and permissionless, I feel that this can become a huge explosive market that has like unlimited potential. There are many crypto protocols that are already taking advantage of Synthetix. There are many of these protocols are already part of the Synthetix ecosystem. If you look at the kind of synths that are already there, you can trade in USD, ETH, BTC, Solana, Link, AVAX, euros, etc., and more will be on the way. Synthetix started out as Haven. They were a decentralized payment network and a stable coin, but I think they eventually pivoted. This was their old white paper. The new light paper is on their website. You can read through it. You can they talk about how this entire mechanism will work, what is the benefit of owning Synthetix tokens, what the tokenomics, etc. Now, if you look at their roadmap, they have had a phenomenal roadmap, and they have been doing well on achieving what they planned. So broadly, in the last 2-3 years, they've had several upgrades, and they have been able to complete all of that. They have a good lineup of investors as well, like Coinbase Ventures, Three Arrows Capital, etc. This is important because I always look at the fact that if there are good investors, it means that the investors have already done their due diligence, and you and I can just piggyback on that due diligence. In terms of tokenomics, this is an inflationary token, but the inflation is not a lot. It will be, the inflation rate has been consistently reducing. The tokens will soon be roughly saturating around 275 million tokens. About 60% of this is for staking rewards. The rest are split between the team, the foundation, partnership incentives, etc. You can go over to their website to also see the governance. Synthetix is moving towards, from a foundation-led protocol to something that is completely decentralized, something that is controlled by DAOs. They have different structures, council members. They have about 4 DAOs. Their entire governance structure is present here. DAOs for the community, DAOs for the protocol, the grants council, the risk committee, etc. There are different members that will control different parts of this ecosystem, and they are moving towards a full decentralization. So that is great. This means that this particular protocol is a true embodiment of the Web3 phenomenon. You can also go over to see the kind of activity that is happening on it. This is important because apart from there are 6 parameters that I normally go through: team, tokenomics, roadmap, stakeholders, activity, and utility. We saw 5 of them so far, and this is the last one: activity. What are people doing? Are people using it? Let me show you. So this is the trade volume. Just 2 days back, there was 198 million worth of trades that have happened on the Synthetix network. Yesterday it was about 160 million. So trade volume wise, it's good. It's been significant, but number of trades has been less. That's because this is a difficult thing for anybody to understand, right? The number of trades or the number of traders are quite less. If you just look at the number of trader numbers here, that's about 412 in a 30-day period. Right? Is that good or bad? I think something like this will be most likely an institutional use case, most likely for large whales and not for average investors like you and me. So the numbers are going to be low, and I'm not too concerned about it. What I'm really hoping for is institutional investors start getting in, institutions start really becoming traders here, and that will significantly shoot up the volume, significantly shoot up the kind of activity that is going on in this protocol, and hence the adoption price will follow after that. If you look at some interesting metrics that I normally try and observe, one of them is price correlation with Bitcoin. It's 0.35. Right? If a token is breaking away from being highly correlated with Bitcoin, that's a great sign. It means that that token is about to get its own unique identity. It is moving away. It is not going to be dependent on Bitcoin anymore. 0.35 is a price correlation that is just phenomenal, because most tokens, including Ethereum, are something like 0.9, 0.95 price correlation with Bitcoin. So they're heavily dependent on Bitcoin price movements. If Bitcoin price goes up, Ethereum will go up, and so on. But here it's 0.35, so it's the dependency is quite less. One concern is that today only about 4% of the holders are actually making a profit. 93-94% are in a loss. Right? And the fact that 70% of them have been holding it for more than a year, that is a little bit of a concern, because the bull run was really last year. So majority of the people have gotten in the last 1 year, and given the fact that 70% of the people here have been owning it for more than 1 year, and only 4% are in a profit, that's a bit of a concern, right, in terms of the prices. I also look at in terms of rating. What are other people? What are different rating agencies of sorts? Right? What are they rating this token as? Let's try and see that. Right? Let's try and see what these rating agencies are looking at. 2 of the biggest ones are Token Insight and Blockonomy. They usually have a rating. Other than that, there are many other individual raters as well. If you look at the Blockonomy rating, it's 77. If we go over different parameters from product, team, fundamentals, GitHub, marketing, all of them are 4 and above, 3.5, 4 and above. So that's fine. Nothing is off. Nothing is like a 1-star rating. If something was a 1-star rating, I would be concerned. You can go to baserank.io and check out these ratings. Token Insight is also given a 70. They're also giving, even on individual parameters, 4 and above. So that is good. That's like a safety net. Someone else is rating them 82, 97, 66. I don't see an abnormal rating. What is an abnormal rating? I don't see something like 30 or something in the 20s. If there was something, then I would try and see why this person rated it so low. But there's nothing like that, so that's good. And the last is, I wanted to show you something that Vase Ratings has written. This was back in 2020. They published this article. Right? They're also hedging on the fact that this is a huge market. Right? The total addressable market that this particular token is operating in is more than 700 trillion. That is phenomenally big. Even a fraction of this market, if it was captured by Synthetix, the price would just shoot up. And back in 2020, these guys predicted, when the price I think was $5, they predicted that Synthetix will almost triple, right, by the year end, and that actually happened. Synthetix did triple. If you look at the price today, it's at about $2.93. It's close to 90% down from its all-time high. Its all-time high was $28, what we see here on the right side. That was about a year ago. From that 28 the 28 price levels, it has collapsed to about 2.93, 90% down. So if you do want to enter, then it's a good time for you to research. Maybe look at all the links that I showed you, go over more such links and figure out if this makes sense for you, if this makes sense for your portfolio. Do your own research and then make a decision on whether you want to invest or not. To me personally, this is a great sector. The token itself, while it's doing well, I'm more betting on the sector itself. Derivatives are a huge market, and I feel cryptos plus derivatives, the fact that cryptos are borderless, the fact that derivatives has people who want something like this, the combination of this can be explosive. It can be something that will really push prices up for all the tokens that are operating in this. I will try and analyze some of the other tokens as well that are operating in this space. Synthetix is the first one that I'm analyzing. I'll try and analyze a couple of more in the coming days, but hope this serves as a good indication or a good direction for your research. Welcome to the Wave Crypto Club. If you like this video, then subscribe to the channel, hit the like button, share it with your friends, and don't forget to hit the bell icon as well. Thank you so much for watching.